and welcome to the Arizona Sonoran Copper Company Town Hall Forum. We are here this morning with CEO George Ogilvie, who will update you on the company's strategic milestones and work programs, as well as advancements of metallurgy, permitting, detailed engineering, and drilling activities related to the Parks/Salyer project and the Cactus Mine project. And now a few words about the company. ASCU's principal objectives are the identification, the acquisition, exploration, development, and sustainable production of base metal properties regions with low geopolitical risk. Their principal asset is the 100% owned Cactus Project, located in Arizona, approximately 70 kilometers south of Phoenix International Airport and just outside of the city limits of Casa Grande. Geologically, the project is situated at the convergence of three major porphyry copper belts and benefits from excellent nearby access to a skilled workforce and local infrastructure. So now, before we get started, I do want to remind you that if you have any questions for the company, please place them into the Q&A tab at the top, located near your chat sections. We will answer as many questions as we can at the end of the presentation. And now I'd like to turn it over to George. George?
Well, thank you, Joanne. It's Arizona Sonoran Copper Company, and I'd like to welcome everybody this morning. And the title of our presentation is Copper Invest in Sustainability. We do make some forward-looking statements, so I'll draw yourself to the cautionary language. This presentation is on our website, so please review that at your own discretion. A little bit about the share capital structure. So as you're all aware, we completed a bought deal in February of this year. So today we have 104 million shares issued, fully diluted 114 million. The options and warrants are in the money. Importantly, the company is debt-free, and of course, we have a very strong treasury with today approximately $29 million cash in the bank. And we are expecting to close this week on Rio Tinto's pro rata rights in a private placement that'll bring in an additional 2.3 million Canadian dollars to the company's treasury. Of course, since the last financing, we've seen Tembo Capital support the company in the financing, but see further dilution, and now they're down to 32%, which is in line with 31% of institutional accounts and 26% of retail. We are covered by 6 analysts with the target price ranging from $2.75 to $4 Canadian. So as everybody's aware, it's a brownfield site in a tier 1 jurisdiction in Arizona. Importantly, the company's land package is 100% private, meaning that the permitting process is significantly simplified. We're not dealing with any federal regulators. We're only dealing with the state and the local municipal authority. This is a simple heap leach with an SXEW plant to keep the capital intensity low. I'm sure you'll all agree with me that over the course of the last 2 years since becoming a public company, we've continued to add size and scale to the project. And of course, now we have 6.5 billion pounds of contained copper actually sitting in the ground. And recently we've had an exploration success at the Northeast Extension, which would seem to indicate there's further potential for exploration success. We have a very strong senior management team that has a proven track record of delivering exceptional results for the shareholders of the company. And of course, we have strong shareholders and supporters. And of course, with respect to the copper market fundamentals, we believe the supply and demand fundamentals remain extremely strong. And we've got a wonderful ability here in the next 2 to 3 years as we put this mine into production. We could actually see the beginnings of a bull secular market in the copper space. Thank you, Alison. So very strong management team, 170 years of experience between all 7 executives here. As you can see, we're spread between Toronto and our corporate office in Tempe, Arizona, which is only some 40 miles north of the Cactus Project itself. The management team is supported by a very strong board of directors. David Lang, our chairman, is the current chairman of Fortuna Silver. And of course, we have a lot of experience on the board, and we were pleased to bring in Sarah Strunk some 14 months ago. She's also on the board of Teck Resources, and is a very well-respected lawyer within the state of Arizona. Thank you, Alison. So with respect to the location, as everybody's aware, the asset is located 40 miles south of Phoenix. Phoenix has a population of 3.5 million people. We're 5 kilometers west of the city of Casa Grande with a population of 55,000 people and growing rapidly. And we're about 75 miles north of the city of Tucson with a population of approximately 1 million people. As you can see, we're very well supported with infrastructure. Interstate 10 runs only 10 miles to the northeast of the project. And on our southern border, we have the Maricopa-Casa Grande Highway. And indeed, the main power line actually runs right through the property with more than enough excess power available on it for all of our business needs. I'm sure you're all aware as well that Arizona supplies 70% of the domestic supply of copper into the US market. And on an annual basis, Arizona ranks extremely highly with respect to the Fraser Institute rankings as far as mining investment is concerned. So a little bit more about the permitting. I mean, obviously, we already have our aquifer protection permit for the surface stockpile, Cactus East, Cactus West. And of course, we have water rights until the year 2070. And there's an abundance of water in the area immediately below surface, some 2,000 to 2,500 feet on what we call the basement fault. Last year, November, we applied for our industrial air and mineland reclamation permits. Those were administratively accepted in December of last year. So the clock is now ticking with respect to Pinal County and the Arizona State Mines Inspector, who now have 6 months to give us a formal response to our permit application. We believe in the next several weeks, we'll be announcing that we have received our mineland reclamation permit, and we expect before the end of April that we'll be in possession of the industrial air permit. So from those permits being administratively accepted to actually being received, you can see that's well within the 6-month window that the regulators have. The next key permit here would be the construction and development permit. We see ourselves making an application for that late this year once the pre-feasibility study is substantially completed, assuming in the first quarter of next year that we have that permit being administratively accepted, and then we start the 6-month clock. We would anticipate having our construction and development permits in hand by the summer of 2024, which is just before the bankable feasibility study would be due. And of course, between PFS and bankable, myself and the CFO will be working on project financing. So you can see there at the back end of 2024, if we can deliver on those 3 key objectives, there's an ability to start breaking ground before the end of 2024 on this project. Thank you. So when we acquired the property in late 2019, the initial resource we had was a surface stockpile, 224 million pounds of copper in stockpile. We drilled around the open pit and Cactus East, which was known by ASARCO, and we increased the resource to 3.5 billion pounds. And of course, last year with Park Salyer going out with an additional 2.9 billion pounds of copper, we now have 6.5 billion pounds of contained copper in the ground. We've spent approximately $45 million in pure exploration costs, which essentially means that we're finding a pound of copper in the ground for under 1 cent a pound of copper. So, you know, with that type of return, it's absolutely telling us that we should continue to explore on this property, as there's a high likelihood that we're going to continue to add to the global resource. At 6.5 billion pounds, or approximately 3 million tons of contained copper in the ground, we believe this is the 3rd largest independent copper project in the US, behind Santa Cruz, which obviously is Ivanhoe Electric, immediately on our southern border, and obviously the Pebble project. And of course, we're all aware that there's a potential that that one may not actually get built. So we're certainly up there as far as size and scale is concerned, as far as independent copper projects in the United States of America. Thank you. So a little bit more on the land package, and you'll have probably seen some 3 to 4 weeks ago, we announced the acquisition of Mainspring, and we were happy to pick that property up because we know that the mineralization at Park Salyer doesn't stop at the imaginary boundary, and that it will continue over onto the northern portion of the Mainspring property. So we've no initial plans this year to drill on Mainspring, but I do believe over the ensuing years there's an ability where we can drill at Mainspring, and we're likely going to see continued mineralization coming across the boundary from Park Salyer. The other key aspect of picking up Mainspring was that prior to that we had 4,800 acres of land, and that land was sufficient for all of our infrastructure needs for the leaching of the oxide and the enriched material. However, if we plan on looking at the leaching of the primary sulfide through successful testing of the Newton technology and a JV with Rio Tinto, or we even consider at some juncture down the line a copper flotation mill, I would certainly say that we're going to need additional land, and the company estimated that probably we would have to pick up an additional 1,000 to 1,500 acres of land if we want to leach the primary sulfide and or consider some form of flotation on the primary sulfides at a later stage. So Mainspring provides us with an additional 530 acres of land. Obviously, it doesn't get us there to the 1,000 to the 1,500 acres that we need, but it is a good step forward. And the good news is to the southeast of the property, there is additional land which is owned by the Arizona State Lands Department, and there could be the ability over the course of the next several years to continue to pick that land up and increase our land package. Thank you, Alison. So as everybody's aware, we put out a PEA in 2021. At that time, it was part of the qualifying document for the IPO, and we had a NPV 8 after tax of $312 million US and an IRR after tax of 33%. At that time, we were envisaging an 18-year mine life, and we were producing about 28,000 tons of cathode production annually. However, that PEA did not include Park Salyer. And of course, with the announcement of Park Salyer last year, September, and the maiden resource of 2.9 billion pounds of contained copper in the ground, we see Park Salyer being integrated now into the Cactus PFS. And we believe that Park Salyer will be material to the overall economics of the project. So the mandate that the senior management team has been given and the guidance that we've given to our consultants is that we want to look at least a 50,000 ton cathode producer annually, and we'd like to see a mine life in excess of 30 years. So certainly you can see that if we were able to produce a PFS at the end of the year that had those type of metrics in it, it would be a significant ramp up from what we presented 2 years ago to the market under the initial PEA. Thank you, Alison. So when we look at the leachable material at Cactus, we've got it broken out into the 3 areas of open pit, underground, and stockpile, and then the resource classifications of indicated and inferred. And I'll draw your attention here to Cactus East, which is the underground mine, and you can see there the T-sol grades, which are 0.95 and 0.88. The total copper grade would be well in excess of 1% copper. That compares very favorably with the Santa Cruz deposit, which is immediately across the road, that has a grade in and around about a 0.95% copper. And of course, that's really as the downplunge extension of the mineralized zones that we intend to mine as part of this deposit. Thank you, Alison. So I'm sure you're all aware that yesterday we put out a very robust press release. We had drilled some holes last year into Cactus East as part of our measured infill drilling program for the BFS in 2024. And some of the holes have come back, and obviously they're very robust. We're seeing over 200 feet of oxide and enriched material grading well in excess of 1.75 total percent copper, 1.65% T-sol. And then you can see some of the core on the left-hand side there, which looks very impressive. And I believe that portion of core actually holds better than 3% copper. Onto Park Salyer. This deposit sits 2 kilometers to the southwest from the main Cactus deposit. You can see here the in situ grades on a total soluble basis, 1.06, so even better than what we were seeing at Cactus East. And of course, it's 4 times the size of Cactus East, which was about 30 million tons. Here we're showing about 140 million tons. And at those type of grades, that would give us 1.46 million tons of contained copper in the ground. And at $10,000 a ton, you can see there that's well in excess of $10 billion in potential revenue that might be available to the company in the financial and economic model. So beyond the leachable material, which is the oxides, and the enriched, which is chalcocite, we're obviously in a partnership with Rio Tinto and looking to deploy the Newton technology, which looks at the leaching of the primary sulfide. When they approached us well over a year ago now and conducted initial mineralogical testing, their computer program predicted a 72 to 82% recovery of the copper from the primary sulfides. Last year, October, we sent several hundred kilograms of samples to their laboratory down in Bindura, just outside of Melbourne. And in November of last year, the first 6 of 13 columns started up. And in January of this year, the remaining 7 columns actually started up. We've spoken to Rio Tinto, and they've affirmed on several occasions that at some juncture before the end of the second quarter, we do anticipate putting out the preliminary results from the Newton testing. But I can tell you, after seeing the first results coming from the first 6 holes, it definitely looks as if this technology has applicability on this deposit, although it's still is very early days. And of course, within the 6.5 billion pounds of copper we have in the ground, we have 1.7 billion pounds of copper, which is in primary sulfide. So that is a stranded resource that the shareholders are currently getting no value for. So if there was a way to actually integrate that into our mine plans and financial and economic model, provided there's a fair and reasonable commercial agreement with Rio Tinto with this Newton technology, then there is a possibility, any transaction could be accretive to the shareholders of the company. Thank you, Alison. So we put a hole out yesterday as well, which was drilled at the northeast extension. Previously, ASARCO had drilled there, and I think the best hole that they hit was like 47 feet of just over 3% copper. And we were trying to follow up on that hole. Unfortunately, we didn't see 3% copper, but we did see almost 1,000 feet of mineralization, of which 250 feet of that was oxides and enriched material, and 650 feet of primary. So it's definitely telling us that the system is still out there at the northeast extension. And of course, if there's going to be an underground mine at Cactus East, and we were able to prove up new resources at the northeast extension, there's every possibility that we could drive across with a horizontal drift and drift into the northeast extension and open that area up for mining purposes further down the line. The other area of interest is we've been conducting ionic leaching throughout the entire site. We've seen some strong indicators at the northeast extension and also the gap zone, which exists between Park Salyer and Cactus West. ASARCO drilled there, but the holes they drilled were only 300 feet in depth because they were condemnation drilling holes. And we know when we hit the top of the mineralization at Park Salyer, we're usually about 1,000 feet underground before we hit that mineralization. So the holes that ASARCO drilled were never deep enough. And we believe there's a possibility that with some deep holes going into the gap zone, we could see mineralization there extending from Park Salyer back towards Cactus West. Thank you, Alison. So we kind of touched on our schedule earlier, but we remain on track for delivery of the PFS late this year, early 2024. As I said earlier, with the construction and development permit in place by late summer of 2024, the feasibility study due in the third quarter of that year, provided the project financing's in place, we can start breaking ground at the back end of 2024. And with a 18-month construction and development period to first cathode production before the end of 2026, we should see first cathode being produced from this asset. A little bit more on peer benchmarking. So we have obviously the Lassonde curve here, and we believe obviously we're in the development and investment analysis phase. You can see we've put the PEA numbers in on the right-hand side, 18 years, 62 million pounds life of mine, 28,000 tons per annum of cathode. And when you compare that to Foran Mining that has the McIlvenny Bay project in Saskatchewan, you can actually see that the production profile is not too far off one another. Of course, they have much higher grade and they have byproduct credits. But there's a big disparity between the current market caps of the company, with herself only being at 185 million and Foran, I think, being in and around 800 to 900 million. If we then extrapolate forward another 9 to 12 months and we can produce a pre-feasibility study with 50,000 tons of cathode production annually in a 30-year mine life, you can actually see that that would take us up to similar operating parameters similar to Aero Copper, which obviously is in Brazil. And today that company has a market cap of close to $2 billion US. So we believe, provided we can deliver a robust PFS at the end of the year, there's a strong likelihood that we're going to see a re-rate of this company in the next 9 to 12 months. Thank you, Alison. When we look at the PNAV, you can see there 0.46. We've come up in value in the last several months, but still very much under our peer average. And then on the next slide, when we look at the enterprise value per pound of copper in the ground, with 6.5 billion pounds and an enterprise value of about $150 million, you can see there we have an enterprise value per pound in the ground of under 1.5 cents, which is well below the 12 cents that Ivanhoe Electric is getting immediately on our southern border with Santa Cruz. And then finally, I think the two key companies here again would be Ivanhoe and Foran. You can see we were only at the PEA stage of development. But as far as all the other attributes are concerned, we're in a great jurisdiction. I think we match up well with Foran when it comes to the overall global resource of 6.5 billion pounds. The production profile we showed is very much in line. You can see our PEA C1 cash costs and capital intensity was lower than Foran, and the headline numbers were also better. But today, obviously, as I said, there's a big disparity between the valuations of the company. Thank you, Alison. So just to finalize, we have a high quality project in a tier 1 jurisdiction with robust economics and relatively low capital intensity. We've seen tremendous success with growing the project over the last several years, and we believe that's going to continue with further exploration upside. And of course, with the PFS coming out at the end of the year, if we can attain those type of production metrics that I spoke about, I think it'll give the company a re-rate at that juncture in time. And of course, we have a strong management team with a good track record of delivering exceptional results for the shareholders of the company. And I don't believe that that's going to change on this project or with this company. So that concludes the formal part of the presentation. And I'm now going to hand back to Joanne, and we'll open up the floor.
Thank you very much, George, for a fantastic update. You must have some very happy shareholders, and you certainly have some interested ones, as we have over 100 participants in the room today. So well done, everyone, and thanks for tuning in. And now we'll take questions from the audience. Again, a reminder to place your questions into the Q&A tab located at the top of the chat section. And the first question for today is, let me get into my Q&A here. All right. Question about cash. How far does your cash take you? Will you be able to complete the feasibility study?
Yeah, so with the Rio Tinto investment, let's say we have $30 million US, that cash will take us through to the second quarter of 2024 at this juncture in time, based on the current burn rate that we envisage. So it gets us past the pre-feasibility study, but it does not get us to the bankable feasibility study in the second half of 2024. Now, that is not to say that the company doesn't change perhaps some of its work plans and reduces the cash burn. There is an opportunity that if we were to do that, we could extend the cash out beyond the bankable feasibility study, but we haven't made those decisions at this juncture in time.
Could you see another strategic partner in the future?
We've been approached by quite a few strategics to sign NDAs and come into our data room. At this juncture in time, we believe it's a little bit too early. We'd like to complete the internal resource update, and obviously that would come through Park Salyer being in an indicated resource, and then that being integrated into a mine plan. When strategics come into data rooms, obviously the first thing they want to check is the reserve and resource, and we'd rather that they were working with up-to-date information. So I could see an opportunity in the second half of this year where one or two strategics could be let into the data room to take a look.
Okay. Thanks, George. Can you comment on your water rights situation?
So the company has water rights to the year 2070, which is 47 years away from today. And we have the ability to take water at a rate of 3,800 acre feet per year. And somebody told me the other day that there's 320 million US gallons in 1 acre foot. When we did our water balance on the PEA, the maximum water we used in any 1 year was 1,200 acre feet per year. But with Park Salyer coming in, I would expect that number to increase, but I wouldn't expect it to go above 2,000 acre feet per year. And there are several wells on the property which stem back to when ASARCO was actually mining here, which are still active today. And we have piezometers actually in those wells which measure the flow rate and the volume. And we see more than an abundance of water in that basement fault aquifer for all of our business needs. So we're in a very unique and fortunate situation that we don't just have water rights to 2070, but there's actually an abundance of water right below our feet.
Okay, thank you. Can you talk to us a little bit, George, about your positioning in the critical metals sector and how important that is going forward? Seems that everybody's jumping on the critical metals bandwagon, but you've been there all along. So maybe you can talk us through that a little bit.
Yeah, well, in the US, I mean, obviously there's a host of metals which have been listed as critical metals. Unfortunately, copper is not one of those, but I think there's a strong possibility that the US may relook at that and actually list copper as a critical metal. I know there's a lot of lobbying going on there, And interestingly enough, I believe in the European Union that came out with a report last week, copper was listed as a critical metal. All of the copper cathode that we will produce here will stay within the domestic US. It's not going on a container ship, and it's not heading out to the east. We've already reached out to several potential downstream users of the copper. So everybody knows that, electrical vehicles don't need copper cathode, but they do require copper wire, copper foil, etc., etc. So in Casa Grande, there are actually 2 electrical vehicle manufacturers, Lucid Motors and Nikola Trucks. And we've had some high-level discussions with the executives of those companies, just all very informal, that as we advance our project and continue to de-risk the project, is there an opportunity to actually put our copper cathode into their supply chains? And I think Mr. Trump was using a phrase several years ago of made in America, but if you could execute on that, it would be made in Casa Grande.
Good on you, George. That's great. Okay, so let's talk about this Newton technology. Like, what actual advantages does it bring to the project? And like, how does it feed into the bottom line?
Well, as I said in the presentation, we currently have 1.7 billion pounds of copper in the ground, which is copper in primary sulfide, in this case, chalcopyrite, which is a stranded resource, meaning that it's not currently in any of our business plans. Typically, the only way to recover the copper, in the primary sulfide would be to build a flotation mill with a tailings pond. You then produce a concentrate, it goes on rail cars, it gets taken to a smelter, that then goes to a refinery. From an ESG perspective, that adds a lot of greenhouse gases. So the beauty of the technology, if it works, means that you can go into old mines with low-grade sulfide dumps, and you can recover that copper on a very low capital intensity basis, as it takes advantage of all the existing leaching pads and a standard SXEW plant. And at the same time, you're not having to send material off to a smelter and or a refinery. So from an ESG perspective, it obviously is a much greener solution, which obviously fits in well, given copper is absolutely required for decarbonization and the green energy thesis.
Okay. Excellent. I see people are using the upvote emoji. So, who holds the narrow wedge of land between PS and Mainspring? Will that limit your mine plan on that boundary?
Alison, can you pull up the map? Can we move the slides to the boundary just so I can? No, the Google map. Yeah. Oh, I see, with that little triangle in there. No, that won't limit our ability to mine. In reality, we're going to have to stand off about 100 meters or so from the road there, and the rail line, which is actually on our southern border anyway. So any infrastructure that goes in will be standing off that road anyway. And we had a similar situation on the northeast extension, where several kilometers away we have a residential community, and as part in that northeast extension, we had to build, or we will be building, a view shed berm, which is 30 meters high, and that will prevent the community, seeing into the property, and it'll prevent noise and dust. So I would suspect on our southern border we don't have any residential areas there, but we'll have to stand off the road at least by 100 meters.
Okay. Next question. Any evidence the Biden administration decisions that have been made recently are helping acceptance of copper mining by NGOs in Arizona?
Difficult to say. It really depends on, whether you're on private land or BLM public land. As I said earlier, we're in a very unique situation that we're all on private land, and we have a very, very, very strong social license and a community that's very supportive to see this mine coming back into production. So we already had great support, and I don't think anything the Biden administration is doing is changing that either negatively or positively. And I can't really comment on other operations that have had challenges in the past with respect to permitting on BLM land.
Okay. Any royalties on the property, George?
Yep. So on the Cactus Project, which does include Park Salyer, there's a 3.18% NSR, which belongs to Tembo Capital, our large shareholder, and RCF, a former shareholder. The company does have the ability to buy back about 0.64% of that, which would take it down to 2.5%, which is certainly manageable. On the Bronco Creek property, which we picked up from EMX Royalties last year, which is sort of to the right of Park Salyer, but we know the Park Salyer mineralization extends over onto that claim. There's a 1.5% NSR, but the company has the right to buy back 1% of that for $500,000. And when we run our internal models with the integration of Park Salyer and into our own model, still yet to be verified by our external consultants in QP, it does tell us at a flat $3.65 copper price that it is in the interests of the shareholders to buy those royalties out over the course of the next 3 to 4 years.
Okay, fair enough. All right, we've got someone here asking about the drill program. So can you quickly give an overall summation of the current status of the drill program? When will it be completed? And do you expect to expand that program?
So the bulk of the monies right now is going into the infill drilling at Park Salyer for an indicated resource. And those holes will actually be finished in the next couple of weeks by the end of March. And at that point in time, the 2 drills which are currently allocated to Park Salyer will stay at Park Salyer, but they'll then start doing the infill measured drilling. And we anticipate that drilling should be completed sometime in the late 3rd quarter, early 4th quarter of this year. Now we have an ability there if we want to scale that drilling back and save some money, as per one of the questions I was given earlier on, cash outlay, etc., because you don't want the entirety of Park Salyer to be in the measured category. When it goes into the financial and economic plan, and you've got a 30-year mine life, let's say, and we're looking at some debt financing, we'll probably look at a 5 to maybe 7-year tenure on the debt. So really, the debt providers are really looking at the first 5 to 7 years of the plan, and do you have reserves there that are in the proven category, which can only come from measured drilling. So that drilling will carry on until late 3rd, early 4th quarter. And then we have a 3rd drill on site that's actually doing the exploration drilling at the northeast extension. We're going to continue there over the next couple of months. And then in the second half of the year, that drill will then go to the gap zone that we spoke about earlier. We're not getting aggressive on exploration on the property. I think we've only got about $1 million allocated between the northeast extension and the gap zone. It's really just about showing the market that we've hit mineralization, and that with further dollars invested in exploration down the line, we've got the ability to significantly increase the resource well above the 6.5 billion pounds that we have currently. But with such a large resource at the moment, we already feel as if we've got the tiger by the tail, and we're going to be able to produce a very robust PFS for the shareholders of the company.
Okay, thank you. All right. The next question is all about that crux investor person that did the analysis, in which it states that the metallurgical test work is partial, incomplete, not well explained. Do you want to rebut that, or do you want to take a crack at that, George?
Yeah, no, absolutely. Look, I think obviously we were disappointed in that report that was put out by the analysts. I mean, we have to remember it's a PEA and it has a level of accuracy of plus or minus 50%. And you're not going to have detailed metallurgical work in a preliminary economic assessment. We did actually rebut that analyst report, and we had our consultants and ourselves prepare a rebuttal, which was sent to Crux some 2 or 3 weeks ago. And at this juncture in time, they have not answered our calls or responded to the points that we actually raised with them, which actually I think tells you something about the level of report writing that they actually put out. But what is pleasing for me is that a lot of the issues where they addressed, where there were some shortfalls, have all been addressed in the pre-feasibility study. And I'm sure for those listeners on the call today and those people who've known me throughout my career, they absolutely know that George Ogilvie will leave no stone unturned. And when it comes to technical reports, we will double dot the I's and double cross the T's. And I can assure you that when we produce this PFS at the end of the year, it's going to be a high quality document.
Thanks, George. Now, given the fact that you're following the Lassonde curve, how are the commodity prices affecting you right now?
Well, they don't really affect us in a sense. I mean, we've strengthened the treasury. We don't have to come back to market at least for another, 12 months. So we're in a very, very good position. And I think for ourselves, it's really all about delivering the pre-feasibility study. And as I said earlier, if we can deliver those metrics that, have been given as guidance to the consultants and to our own senior management team, then I think we're going to have a very accretive project on our hands, much more than what we saw in the PEA almost 2 years ago now.
Great. And do you think that the market is missing something with ASCU? Like, is there something that you really want, that you want to drive home so that they can really see it?
I think that the key thing for me is the market's valuing the company, in my opinion, on the preliminary economic assessment that it went out in August of 2021, but it was prepared some 3 to 4 months prior to that. And when I joined the company in July, it was already 95% baked. So there was very little opportunity really to change it. But I think that's what the company is being judged on. And although an 18-year mine life is good, 28,000 tons of cathode production annually is on the small side. You really want to be above at least 50,000 short tons of cathode production annually. And as I said, if we can almost double the mine life as well to 30 years, then we'll be sitting with a world-class asset in a tier 1 jurisdiction. In fact, the company, if money wasn't an option for us when it gets to the project financing, the way in which we're envisaging mining these assets would be Park Salyer first, with Cactus East coming on in year 2 or 3. Those get mined for 20 years. And then at the back end of the mine life, we tack on the open pit that takes us out to year 30. And we've did it that way deliberately to keep the upfront capital as low as possible. But if money was no option, you could bring the open pit forward, mine it in conjunction with the underground assets, and potentially you'd be looking at a 65 to 75,000 ton annual producer, but the mine life would get shortened to 20 years. And remember, all of these preliminary sort of plans that we're throwing around at the moment in these scenarios do not include any success coming from Newton and or at some future juncture looking at a flotation mill and getting access to the copper from the primary sulfide.
Okay, and that kind of goes hand in hand with the next question, which is where do you see the company really in the next 3 to 5 years? Where would you like to see the company? Maybe that's the better question.
Well, throughout my career, anytime I've been involved in the junior sector and I've been going through technical studies, it's always my ultimate goal to de-risk the project, put the project financing in place, and ultimately put this into production and manage and operate this company and grow it into a solid mid-tier copper company with assets in the heartland of the Arizona Copper Belt. And that is our primary goal with respect to this project. And the reason why I say that as well is that when the management of the company believe that they are going to be ultimately held accountable for the PFS and the bankable feasibility study, you ultimately end up with a superior product, because you have to look the shareholders in the eye when this thing is getting built or it's in production and tell them we made our goals, or there was a cost overrun, or we didn't make it in that area, but here's how we're going to fix it. Some companies, obviously have different strategies, and their ultimate strategy may be to sell the company. And I find in those instances, sometimes the technical reports that get done are not to the same degree of professionalism and become more marketing documents. And of course, you always get found out there, because at the end of the day, when people do their due diligence, they don't make a bid for the company, and or at the end of the day, you actually have to build it. And then you find that suddenly now you can't deliver on those promises, and everybody's reputation is shot to the ground.
I hear you. It's not like we've ever seen that happen before.
No.
All right. Okay. So final question before we wrap up. We're almost at the top of the hour here. Some of the grades at depth seem quite low to be economic for flotation recovery. Are you banking totally on the Newton technology?
No, not at all. And at this juncture in time, let's remember, we're not banking on the primary sulfide at all at this juncture in time. So it's still very early days. And if there's an accretive deal to be done with Newton, then I think that's going to be the cherry on the cake for the shareholders. Nobody knows, what the copper price is going to do 10, 15, 20 years down the line. With a long-lived asset like this on the leachable material, which we can control, there's going to be a lot of optionality. I would agree with that comment that 0.4 or 0.8%, which is the grade of the primary at Park Salyer, might be low. And that's in a $3.80, $4 copper price environment. What happens in the next 2 decades if copper goes to $5, $6, $7, $8 a pound? If you listen to Robert Friedland, he believes copper is going to $15 a pound. I can tell you under that scenario, 0.4% copper would make a lot of money. The other thing you have to realize about this system, and we don't report this, but in the primary sulfides, there is some small gold, there's some silver, and there's molybdenum. And if you put in a concentrator, you can actually recover some of the gold, the silver, and the moly. And of course, everybody's probably well aware that moly prices in the last 6 months have risen significantly and are likely going to continue to rise, given the criticality as well to this green energy sector. So this company is in a great situation because of all the optionality that we're going to have over a 30-year long-lived asset.
Thank you, George. So we are at the top of the hour, so we will end our town hall forum now. But before we leave, George, is there anything you'd like to say to your shareholders and audience members who have joined us here this morning? And there's quite a few, as you know.
Well, I'd just like to say for those people listening today who are shareholders in the company, thank you ever so much for your vote of confidence. It is greatly appreciated. And thank you for your patience. I'm very confident that by the end of the year, when we produce our pre-feasibility study, we're going to show some significant valuation jump from what we had in the PEA several years ago. For those of you on the call who are, not currently shareholders but considering potentially investing in Arizona Sonoran, please feel free to reach out to myself and Alison. We're always available, and we're very happy to answer your calls. Thank you, Joanne.
Thank you. And thank you, everyone, for joining us today. Should you have any further questions for the company, you can email them directly to IRO Alison Dwoskin at adwoskin@arizonasonoran.com. And just a quick reminder to please fill out the quick questionnaire before logging off. This really helps us to communicate with you more effectively in the future. Thanks to everyone who joined us today. We look forward to seeing you at the next Town Hall Forum. Bye-bye.